Good afternoon, this is Todd Colvin coming to you from the floor of the CME Group. We are looking at metals, and gold is back. We saw gold decline, it made new year-to-date lows, got down to close to 1280, and it looked like it was done. The dollar's bidding, gold's not in favor anymore. Their yields are going higher, it's stealing the thunder, and whammo, we rally gold about 27 bucks pretty darn quick. A lot of it geopolitical, a lot of it, sort of that risk what if scenario that we've been seeing. And I think the push here, we saw the May high and the May low. We got back to the 50% retracement of the May high to the May low at around 1307. So we got back basically half of what we lost in a pretty short amount of time. So right now the bullish momentum is back. I'm not going to say it's an all-in bull market yet, but we certainly are not looking at a bearish market anymore, and I think we're just at the top end of a neutral. So we're somewhere between neutral and bullish. At least if we can stay above 1300, the next catalyst is going to be, can we get back north of 1325? That could be a stretch ahead of FOMC, but we've got a lot going on, and a lot of this move may still have some momentum left in it. So right now, technically, we are out of the bearish range, at least in gold, as we rallied north of 1300, close to 1308. And if you look at what the dollar did, the dollar has continued to see it trend higher week over week. So this wasn't necessarily a selling of the dollar to buy gold. This wasn't just a mispricing of gold. This was gold separating itself from the dollar. The dollar continued, I think 5 out of the last 6 weeks, it settled higher. And that is something that trend has continued this week. So that wasn't taking anything away from gold. Gold was on its way higher, regardless of what the dollar was doing. So dollar higher, gold higher, something we do see from time to time and something we saw this week. And lastly, let's look at the positioning. We saw spec longs get to their lowest levels since the middle of 2017. And we won't get the report until next week, but my suspect is that we saw spec longs get back in quickly. As soon as we made that first knee-jerk bounce higher off that 1281 low, I'll suspect that the pressure of the geopolitical risk, the canceling of the summit in Southeast Asia, the risks that are continuing to rise in the European banking system, whether it be Italy or Spain, and likewise the risks in Iran and Syria, I think they're all there. And when you start to see yields come down, and the uncertainty of where Treasury yields may go based on economic data and the Fed and whatever, I think that gold becomes more in favor, and that's what we saw here. We saw just the knee-jerk reaction. Where's my best protection? Where can I go for security? Because the dollar rose and gold rose at the same time. These are two independent trades right now. And I think that right now, the positioning-wise, we're going to know that spec longs probably jump back in with both feet, especially once we got north of 1300. That we carried the momentum above that level. So right now we see spec longs getting back in, gold pricing out of the bear zone, back near the bull zone as we head into the weekend. This is Todd Colvin coming to you from the floor of the CME Group.